Before we start, 5 weeks from now, Love Tomorrow Summer takes place at Tomorrowland. Take a look at your screen right now, because there is some amazing which are happening right now. EUVC is on stage, keynotes on Thursday at the Rose Garden stage, and the Investor Lounge at the Impact Circle on Friday the 24th. The speaker lineup is nearly locked in. If you're active in impact investing, sustainable capital, or climate-focused venture, the people in that room on Friday are exactly the people you want to be meeting. Link is in the show notes. If you're coming, I would love to see you there.
What I find very interesting to observe, when there's a $7 billion put into a model company in China and the state actor puts that money in, all of our reaction is, oh, of course, that's how it works. Imagine if the state actor in Europe put $7 billion in Mistral.
There'd be uproar.
What uproar would there be?
Raging in the streets, wouldn't they?
Right.
A few fun, but also maybe depressing facts. The EU generates more startups per year than the US, and venture returns in Europe run about 6% higher, but 30% of our winners head off west. I guess no great surprise.
I know someone in the European government responsible for implementing LLMs across all government services. And what she told me is, yeah, we're not allowed to use US solutions. So we need a European solution, and that's it, you know? So to me, Mistral's in a beautiful position in that there's a long queue of customers wanting that product. They just need to get it right, and revenues are there for them.
What it means for Europe is we have to wake up and just accept that if we don't have the capacity to stand our own 2 feet, we're not going to get a seat at the table.
We're in this new era where there is this technically capable population all around us that is going to enable or be part of the acceleration of this kind of war mode. Okay, all right, we're on our own. We're going to build, we're going to integrate, we're going to make this happen.
Probably the next $1 trillion European company is already operational and running, and they're growing. They're there. Yeah. And I wish I knew which ones they were, because I would put all my money on
Yeah, let's go for it. Hello and welcome to Upside, where every week we dig behind the headlines that are going to affect European venture. Today, it is Mads, myself, and we have a very special guest who I'm going to introduce any second. And what are we looking at? We've got pulling Anthropic's fable, technical or political, some AI chat behind closed doors at the G7, digging into that, DeepSeek raising $7 billion. What will this mean for Europe? Can Europe build a $1 trillion company? Predictions, deals of the week, and what's going on in the week ahead.
This show is not investment advice, and the hosts of this episode may be invested in the funds and companies featured.
Now, today we've got a very special guest on, who is one of the people who decides which European venture firms actually get to exist. Joe Schorge is the founder and managing partner of Isomer Capital, one of Europe's largest fund of funds, backing the VCs that back the founders. 6 vehicles spanning fund investment, co-invest, secondaries, writing checks from 1 to 15 million, with 59 unicorns across more than 3,400 portfolio companies, including the who's who. We've got 11 Labs, ICI, Lovable, Aura, Poolside, Fractal. I could go on. Joe, how the heck are you, sir?
I'm fantastic after that intro. I'll tell you what. Thank you so much. I'm a big fan of the show and super happy to join you this week.
Oh, thank you so much for joining. Mads, how are you, my good man?
Great. Summer is here. What a terrific week. I can see you got some sports news in the lineup, and I can't wait to talk sports.
I had to stick it straight up front because I'm not a football. I know you're a football dude. Joe, are you a football fan?
Not really.
No, I'm with me. I always feel like I lack the manliness when I can't talk about the football stuff. However, when it comes to England, and obviously England winning 4-2 against Croatia, I can't not be proud. But Mads, what you were watching it live, right? I mean, I saw you chatting in Slack on the channel, so you were excited.
It was just a big thing, I think. Best performance from the team in 25 years, and it kind of feels like finally the team has got the courage to play their way.
It's
absolutely
coming.
This time.
Even I remember that song. I think it was 96. That song. I've got some quick news up front, and I wanted to just basically look at some economic health indicators, some over the pond and some here, just to set the scene. Please chime in at any time, gents, if you have any thoughts or opinions. But we know that we are in kind of record market territory, but there is a whole world of other things going on underneath that. But the S&P had 9 straight weekly gains up until the beginning of June. Now it's softened slightly into the 7.5 bracket, but up about 24% over the last 12 months. Kevin Walsh, the new Fed chair, held rates at 3.5 to 7.5, However, the consensus is that there will likely be a rate hike or two later this year, with most economists, 75% at last count, now warning a 20% S&P drop is on the table. So we're back in that kind of AI bubble turf. I don't know if anyone has any comments about that. However, before we go there, UK FTSE closed again, still record highs, 17th of June, 10.5, up 19% over the last 12 months. GDP slightly down, but Q1 actually beat the US, Germany, and a shrinking Eurozone. IMF predicting a 1% growth for 26. Not great, but not recession territory, we could argue. Inflation 2.8, but heading up because of the energy crisis. Rates over here held at 3.75. However, as we might well see, possible rate hikes. So just for broad context, US resilience, stronger growth, but higher inflation, stalling Eurozone, contracting in Q1, inflation fairly steady at 3.2, and the UK somewhere in the middle. So are we entering the energy shock in better shape than our neighbours? I would say yes, but any thoughts before we move on to the main docket? Mads, anything from you on the broad macro?
I think we have a new prime minister this morning, don't we?
What?
Brandon, he won.
Did he? I didn't see the news. I saw that he was likely to win Makerfield. He did.
More than 50% of the vote, yeah.
And I'm sure, Joe, this means nothing to you. Do you know about the Andy Burnham Leadership Challenge stuff? Are you tuned into that kind of side of the UK news?
Of course. I heard it a bit on Radio 4 this morning, and I mean, they're still deciding if they're going to have a leadership contest or not, right? And I don't know. It seems to me the UK spends a lot of time changing its government and less time moving forward.
Yes.
But yeah.
Yes. It's all a bit navel-gazy. And I saw Streeting was up for a fight as well. And who knows, maybe Rayner will come out of retirement. I mean, this is just an absolute mess. I don't know how we tie that back to European venture, but I think what we should probably do is, Mads, you snuck something in the docket this morning that I thought, and I was challenging you on not the relevance, but the underbelly of this story. And it's basically Accenture's earnings out. Unpack this, tee this up, and then unpack this.
So, many people view Accenture as kind of a classical, old school outsourcing company, old economy. This is your, dad's services business. Who cares, as some people would say. And still, we teed it up last week as something to watch out for this week. And the reason is that Accenture, in many ways, is a bellwether for what's happening in the IT services industry as it is affected by AI. And why is that important? It's because enterprise is important for AI, and Accenture is enterprise and enterprise technology and enterprise deployments.
So the thesis here, Mads, just so that I'm right. So the thesis here is, as we now move into this kind of application layer of AI, we need to pay attention to these bellwethers. Is that the thinking?
Well, 100%, because Accenture has always been about the applications and about implementing the applications and the big transformation programs for large enterprise to make technology valuable. Now, if you go back 15 years, people were saying cloud is going to be the end of groups like Accenture because it's going to be so much easier to deploy stuff and companies are just going to do it themselves. Yeah. And Accenture said, well, guess what? And then tripled their revenue over the coming decade. Now, Julie Sweet, who is the CEO of the company, again has said, well, AI is going to be the next tailwind for us. But what happened in the results yesterday is that the numbers disagreed. Revenue was up a little bit, but earnings couldn't meet the expectations. They were mainly driven by cost cutting. Again, earnings per share beat a little bit, but it was on cost optimization. And bookings, so the new contracts that are signed, the forward-looking piece, were down and missed. And so markets, they sort of said, thank you for that update, and continued to pummel the shares, which was down nearly 20% after the earnings were released over the last 24 hours.
Is that inertia, do you think? Is there an aspect of inertia baked into this? Will this bounce? I guess we'll see over time, but what do you think?
Well, that's the whole discussion. Is this a transitional piece or is it secular? And in many ways, there's this big discussion about, you can say, the three main components of a large company like Accenture. And it's a big business. They do $70 billion of revenue annually. We like talking about market cap. This is real revenue, right? It's a real company. There was something like 400,000 employees. It's a massive behemoth. So the question is, what happens to the different components of their business, which is they've got kind of the high margin, strategic consulting, the C-level relationships, the one throat to choke, all the stuff that kind of the rainmakers that are driving some of the kind of the upfront piece of advisory work that then can lead to downstream two things. The first thing is implementation and transition work. And the second thing is sort of ongoing outsourcing and maintenance. What we can see is that the outsourcing and maintenance piece is being threatened by AI because it's becoming easier and cheaper to maintain things with AI. You can do more with fewer employees. And so that's hitting sort of the body shop aspect of the pie. But the other piece is the implementation. What happens there? And historically, application providers like SAP have relied on large systems integrators for implementation. Because if you are an application developer, most firms have said, look, we don't want to have tens of thousands of consultants on our books to implement our software. It's low margin stuff. Let somebody else do it. And Accenture turned out to be really, really good at that. But in the new world with AI, you can implement software in many ways more easily because you don't need maybe 500 or 1,000 people for large implementation. You can maybe do it with 50 or 100. And that feels much more like creating IP, like proper software, and you can run those businesses differently. And that's why the likes of Palantir are really successful right now. That's why we are seeing a lot of work from, not just OpenAI and Anthropic, but also Mistral here in Europe, implementing and working directly with corporates to implement the new AI technology. Now, these companies are taking the cream today. They're not necessarily going to take the long tail, but it is going to pressure the bookings and the growth of large systems integrators like Accenture. So we're seeing probably a secular shift of value from the companies that do the implementation to those that have the IP. And that speaks well to the likes of a Mistral, which actually, maybe, Joe, you'll have a view of that. I think that's one of the ones in your books, isn't it?
We're not in Mistral, unfortunately. I hate to say it. One of the few big things in Europe we didn't manage to catch.
Would you go with you got a new secondaries fund there, right? Will that maybe perhaps sneak in at some point?
We're always hovering around the edge to buy a bit of that. Yeah, that's what secondaries is great for, right? You can buy into companies that are very successful later. But can I come back to your points, Mads, which is I wouldn't count out yet the implementation phase. I think this, just because we have a great new technology doesn't mean that every large company in the world rolls that out quickly and easily. And that's what the Accentures of the world are there for. And I think that wave is yet to come, right? We're still in the moment don't forget, you're on the pointy end of the stick. And most of these big corporates are years behind, and they will need all these implementation services, even if it's just at the beginning, the strategic part, what do we do? The other bit, I think I would add to your two pillars, that there's a third pillar, which is the strategy M&A part. So if you're a large corporate and you think that your product's being disrupted by new AI competitors, you're going to do a big strategy piece and look at buy or build decisions, right? So maybe we should not try to build a new product and wait for our lunch to be eaten. We should just go out and buy. And I think that's also where the strategy consultants make a lot of money and pick the targets, do the M&A process, and so on. So I wouldn't count them out yet. Having
No, 100%. I don't think it's a melting ice cube. I don't think they're going to disappear completely, but I do think it is a threat to sort of the continued growth. I mean, you've seen over the last decade, you've seen kind of a 3x revenue growth, right? Very solid. For a services company, after all its bodies, you need to hire all these people and they build this massive organization. I do think that will shift a little bit, and I don't think they'll be able to grow quite as fast going forward the next 10 years as they have the last 10, 15 years.
I want to move into the models because I guess there'll be nobody listening to this show that hasn't seen that Anthropic's models were pulled. 3 days after launch, the US ordered Anthropic to switch off Fable 5 and Mythos worldwide on national security grounds after a jailbreak enabling serious cyber capability. The order targeted foreign nationals, but the model went dark for everybody. Anthropic is still fighting. They were in the room with Trump and the leadership team, which we'll talk about later. But as we know, the Trump administration is not a massive fan of Dario and Anthropic. But Mads, if you can tee this one up, for personally looking at this, I was not quite sure whether this was a technical thing or a political thing, looking at the capabilities coming through from OpenAI and other frontiers. So is it technical, political, both? How do you think about this one?
I think there is a little bit of almost hysterical reaction from everybody. And to some extent, you could say it's Dario's own fault because he's kind of been doom mongering and sort of fear mongering about
This is
jobs.
PR, isn't it? That's his shtick. Every time he opens his mouth.
He is the one who has been saying AI is dangerous. We need to control it. And guess what? Now he's the one who is being controlled. And he was complaining in retrospect that, the guys didn't do that to GPT 5.5, and OpenAI also has a good model. And why isn't that being sort of controlled the same way? So there's sort of peak hysteria right now, I think, from everybody. I mean, everybody's pointing fingers at everybody. But when you go under the covers, axes will come again, and I think they will sort this out. I think the real lesson is maybe more boring, which is don't rely on a single model. People talk about sovereignty, and sovereignty is maybe part of it, but there's also just concentration risk. Just don't be reliant on just one provider.
But my assumption is not much would have happened in 3 days, right? I mean, nobody's going to be that reliant on something that's been out there a short period of time.
Here's a story from one of our portcos that are doing stuff that's right at the edge of AI. It's super cool, and they're always saying, "Look, we develop stuff with the next model in mind, because the models of today can't quite deliver this enterprise functionality that we want to deliver, but we're almost there, and our harness is getting us almost there." When Fable was released, they dropped that in, and suddenly the whole thing worked.
Yeah.
Okay, so that was one model that shifted everything for them. And then, of course, it was yanked, a couple of days later. And kind of what situations does that leave them in? And what they say is, look, we are now retraining our own models. We're taking the open weight models and we're fine tuning those, because we don't want to be in a situation where we're dependent on it. So I think what it does, if anything, is it just highlights how important that is, and to some extent weakens Anthropic's and in many ways the US's position a little bit. So it's kind of this trade policy. I don't know whether it's maybe shooting themselves in the foot.
Joe, with LP hat on, does this make the whole European sovereign AI bet more investable?
Absolutely, yeah. I mean, I'm with you on all of this. That systems get fragile when you have single points of failure, right? That's just a general thing in software, but also, I mean, we have one strait in the world that affects the whole energy market, right? That's a very fragile energy supply chain when you think about it, and the globalization over the last decades has led to fairly fragile systems. So I think this trend to what we're all talking about now, tech sovereignty, is really a move back to redundancy built into systems and so on. And that plays right into the hands of your portfolios, our portfolios. If you're sitting in Europe, you're a large corporate, you're a government, whatever, and you want a European solution, you're going to look to the technology companies building those solutions. So it's in a way, it's an amazing, you might even go so far as to say it's a gift to the technology builders of Europe, right? And we certainly see in our portfolio companies moving faster and the customer base moving faster. So if you're selling into government, or maybe the extreme is the defense side, right? Extremely long procurement processes that go for years. And all of a sudden there's an urgency to that that's turned years into months. And that's happened very, very quickly. And you see it only when you talk to the salespeople within these startups. So yeah, I believe that this is very positive for European tech companies. We're seeing the effects of it already, and I think it's got some years to run, which means place your chips now. Make your bets in Europe, because I think, I'm always optimistic about European tech, but I think even more now with a burning platform to put solutions in place.
I think you're right. I think that there is also an underlying aspect that I've mentioned before on this pod, but there's something very powerful about this kind of war mode where we're being reminded that we need to think about friendshoring, onshoring, reshoring, whatever that might be. But there is also this underlying aspect where many of the people in government, in procurement, in business learn to type on glass and are technically capable. It's not the boomer generation that maybe aren't so comfortable with tech. We are all now working with people slightly older, slightly younger than us on this call who get it and can make faster decisions and know how to play the game. So I think there is this, we're in this new era where there is this technically capable population all around us that is going to enable or be part of the acceleration of this kind of war mode. Okay, all right, we're on our own. We're gonna build. We're gonna integrate. We're gonna make this happen.
Well, maybe that's a fundamental that's driving faster adoption, but I would also say that the normal rules apply, right? Companies have to build really strong solutions. It's not good enough to have a solution. You have to have a really great solution, as always. And so the customer reacting is great, but you have to also be there with a great bit of software, a great service, whatever. It reminds me, I was last week at SuperVenture in Berlin, and there was a new day, a new format dedicated day to tech sovereignty. It was a new thing they tried. Yeah. So that it's gotten to be that big a topic that it needs its own day. And what was interesting to me is tech sovereignty is the whole supply chain discussion. It's resilience. It touches all supply chains, all sectors of activity. But in Europe, because we have this urgent need for defense, if you sat in the audience of that day, you actually 60% was all about defense. And so when I got up on my panel, I said, well, defending a thing is great and that's urgent and we're building wonderful solution. And the progress there is amazing, far faster and bigger than I could have thought a couple of years ago. There's protecting a thing, but then there's the thing itself. So we didn't spend enough time on that, right? So we need the Mistral to be successful. So we have a European, I know someone in a European government responsible for implementing LLMs across all government services. And what she told me is, we're not allowed to use US solutions. So we need a European solution and that's it, So to me, Mistral's in a beautiful position that there's a long queue of customers wanting that product. They just need to get it right. And revenues are there for them.
I think we'll have in a year or two, we will have very different conversations on this topic, and I look forward to those. Talking about AI and models being switched off and the whole sovereignty piece behind the scenes at the G7 this week, all the big frontier teams and the Trump admin, all the people fighting, the Amadeus, the Altmans, Hassabis he's kind of sidelined to this, but they were all in the same room pitching the idea of a US-led AI coalition to shape the industry, rules, standards, etc. The same day, funny enough, China's foreign minister repitched, because he said the same thing about a year ago, repitched the same idea, but with a global AI coalition instead open to everybody rather than just the US and friends. So question to you both. Of course, the US is leading AI. Everybody knows this, but how should Europe think? How should European leaders respond to this? Joe, I don't know if you've got any ideas on this one.
It's just a big topic.
Big one.
It's a big one.
Big, hairy, scary one.
It's a big, scary one. I'm not a policymaker. Europe has to get a front seat at the conversation for sure. So, we're used to in Europe talking ourselves down all the time, but this is something we really can't afford to not be at the front of. So I think less these days about US versus Europe versus China, particularly the US, Europe. If you look on the ground, you see technology and talent and capital moving.
Yeah, it's a continuation, isn't it?
Yeah, it really isn't us or them. It really is, something starts here and goes there, something starts there and goes here, much faster and easier than it used to. And some of that is rules have changed about that, but also some of that is just how networked we are. If you build an attractive piece of tech, everybody knows about it really fast.
Yeah, it's global, yeah.
It's gone global. So I worry less about, will those things flow around naturally, but certainly on the policy side, I think we should be part of any coalition that starts, and probably ideally it involves everyone.
The old deal seems to have changed. There was a deal between Europe and the US, which was sort of along the lines of, we're happy for the US to be the leader and to be dominant, and the US is happy to support Europe and give us a seat at the table because we'll give market access to European companies and sort of everybody wins. And that seems to have changed a little bit, especially with the current administration, which has a slightly more sort of might is right attitude. and where there's sort of been a view that, you really have to carry your own weight. And so you could argue both sides of that. But I think what it means for Europe is we have to wake up and just, accept that if we don't have the capacity to stand our own 2 feet, we're not going to get a seat at the table. And so, Joe, to your points earlier, we have to build good products. It's not enough that we are just, saying, great US companies, we have, wonderful markets here, we'll let you sell your stuff. And in return, you're gonna listen to what we say. We actually have to compete and be the best at doing stuff. It feels a little bit transparent, this idea of this alliance that's being proposed here by Derek Amodei. And I think he had Demis Hassabis in the room. I don't know if Demis is really part of this or not, or whether he was just invited along.
He tends to step sideways, right? He tends to not get involved in this kind of political stuff. But I guess he feels very strongly about how AI is applied in the real world. So maybe that's part of the key.
I mean, let's steel man what people are doing. They're sort of saying, look, there are really 2 different ways of thinking in the world. There are some allied democracies, and they should have the frontier chips, and they should work together to make sure that AI and the best AI is available to democratic countries instead of Western countries. And that seems plausible. It makes sense. If you look at the steelman on the other side of why this may not be such a good idea, is that China is really leading in open weight and open weight models, and you can't really embargo them. And the risk is if you try to embargo, if you try to contain China in this way, they're going to build their own ecosystem. They already are dominant in open source, and it just creates an even more formidable competitor to the US. So the US ends up losing, and then you may fragment the kind of the tech stacks underneath. If you were Anthropic and looking at this, you're probably thinking, look, it's great if I can have fewer rivals, that's good for me. But I just wonder whether long term it will work. And quite what Europe would get out of it, I don't know. I mean, we're dependent on the US for kind of the frontier models, and we're dependent on China for open source models. So what benefit is there to creating some kind of artificial alliances? Sound good, but let's be clear, some trade barriers around chips. I'm not sure we really get anything from it. So my sense is this would be self-defeating.
In my head, I'm trying to work out what goes on between, or how the world is going to start to apply, I guess, the proprietary stuff, the frontier, then we've got the open source, and then the open weight. And it does feel that part of my personal thesis is watching out for local deployment, which would effectively mean open source, not open weight, because if it's Chinese, you don't know what data's gone in and you don't have the full access. But I think there's going to be a very interesting play over the next 2, 3, 4, 5 years as to what goes on-prem, what gets built, open source, how things kind of get brought into an organization, as opposed to what is using the latest and greatest frontier model. And I'm more erring to big orgs, and this might go back to the Accenture piece. I don't know if you got any thoughts on this, Mads, but people building and bringing stuff in-house and owning, and it being more secure and faster on the SLM side. And anyway, I'm starting to waffle, but does that resonate, or does that make you kick back?
No. People will increasingly be tuning their own open weight models. I mean, Cursor, before the acquisition by SpaceX, they built their own coding model on the back of Kinney K2. And it was a formidable model. Yeah. Right. So you have an existing model, which is an exceptional model, and you then fine tune that using all the data Cursor had and coding, and they were able to stand up a really, really strong model. Now, of course, you could say they're already kind of at the leading edge of this, but many of our companies are fine tuning and developing and their own models based on the back of open source. Yeah. So this stuff is happening today.
Yeah, and we'll see more of this as the application layers start to pile through. We'll see much more and more of this. Well, let's talk about DeepSeek. DeepSeek raised $7 billion, or just over $7 billion at $50 billion. It's first outside money, and there's no foreign money. I was trying to track who was in the round, and it looks like there's nothing in there from anybody outside of China. And there is a big founder control element here. Liang Wenfeng, the founder, is in absolute control, 5-year lockup, no investor voting, apart from China's state AI fund. I guess no great surprise there. Okay, in context, this is a 20 times smaller Val than someone like Anthropic. It's not on the same scale, but it's still a large chunk of money for an open weight model. Question for you, Joe. Obviously, we saw Elon's S1 and the control he has at SpaceX. How do you view this kind of new founder control? Is this part of the vernacular over at Isomer? How do you think about this?
Yeah. Well, I'm pretty old school as an LP on governance topics, and it seems to me that superpowers on a founder context or on a fund context eventually at some point lead to super problems of different sorts, right? And when any of us take on external capital, I think we also take on the burden of responsibility to the capital provider and some governance provisions, and that's a good thing. It's always annoying when a CEO wants to do something and his board doesn't want him to do that, but quite often the board is, if the board is constructed well and is knowledgeable, is more wise than the guy in the weeds building. So I don't know. Elon is an exceptional guy in many things, so maybe superpowers for him make sense. But in general, I prefer kind of more normal governance and the wisdom of a well-constructed board and governance setup.
I wonder if we'll see precedent. I wonder if we'll see more of this coming through. But Mads, another state-backed national champion here. Is the obvious answer more in Europe?
Well, I think our next segment is about Mistral, right? So we're talking about it. I mean, some of the questions here are about founder control. We've seen that elsewhere. Maybe it's a little higher here than it's been in some situations, but it is not something that's unique to this deal. We've talked about government interference, or government access or control. Again, we've seen some of that in the West as well. And we've talked about strategic investments as opposed to sort of pure play financial investment return. But we've also seen that with the US Frontier Labs, right? Google owns 14% of Anthropic, 0 votes. Microsoft's got a huge stake in OpenAI, but that's controlled, outside of what Microsoft really can do. So the DeepSeek controls are maybe harder than some of the stuff we've seen, but it's not unique. Then there's the whole nationalizing angle. Yes, China is so far the first country to put kind of one of these major labs and take direct access there. US has been working a layer down, right? They've been investing in Intel. They've been looking at other parts of the stack. They've all the export controls. So I think everybody's just woken up to how important AI is and how essential it is to have some control and some influence over the direction of this. So you're not left kind of without the sovereign capability. I think that's some of the stuff we're seeing. One interesting aspect maybe is, because this is what people often talk about. I think, Dan, you mentioned it earlier. China, open source, what data do they train their models on? Is there censorship? Well, if you look at the approaches you take, yes, in China, what the models spit out is controlled to some extent, but that's not unique. In the US, we saw the US administration also put in executive orders around what models can and can't do, but what models the US government are allowed to buy. The executive order said that models have to be truth-seeking, and they have to be neutral, and they can't have any DEI influence. And if they do, the US government is not allowed to buy them.
Yeah,
so rather than regulating at the level of saying what the model makers can and can't do, they're saying, well, you could do whatever you want, but you're not going to get any government business if you do. And by the way, there's the whole Anthropic might be a supply chain risk if they don't comply. So I think everybody's got their snouts a little bit in the trough here to try and direct and try and work things. And China's not unique there.
Let's talk about European champion. Let's talk about Mistral. So they're in talks to raise 3 bill at 20 bill. So that's nearly double September numbers. We're not even a year out. Joe, Mistral is obviously Europe's credible AI champion. There are more coming through, and we're starting to see more European frontier and frontier-esque looking organizations come through. But do they have enough cash? Are they adequately capitalized? Are we asking them to fight a war on a budget as an LP? Would you underwrite them? How do you see this? How do you see the Mistral round?
Yeah, well, first of all, I don't have any special insight here. I'm not involved at all. So I don't really know if capital supply is the key success factor either. Wasn't that what DeepSeek taught us? That you could build something actually on a shoestring, contrary to the billions and billions the other things were built on. So I don't know is the real answer, Dan. Yeah. But what I would say is I'm super happy there's a European champion in this area. I think it's needed. As I said earlier, I think there's a queue of customers if they build a thing that works and is powerful, they're pushing on an open door to build a large successful company. So, if you look at the other numbers we've seen, 20 billion doesn't seem crazy at all. Seems pretty sensible. You know what? I tie it back to the conversation we just had. What I find very interesting to observe, when there's a 7 billion put into a model company in China and the state actor puts that money in, all of our reaction is, oh, of course, that's how it works, right? Imagine if the state actor in Europe put 7 billion in Mistral.
There'd be uproar.
What uproar would there be? We
raging in the streets, wouldn't they?
Right. So it's funny how even we have a different reaction to the same phenomenon in a different place. So no, I'm really optimistic about Mistral. I hope they build a super big, super successful champion in this area. But I don't know how much money it takes to do that, really.
Also, it depends what they're doing. They are their application business. They've got their frontier side. They're doing a number of things. And as you say, there is an open door. We see and hear about some of the local provision on the data center side that they're tying into. So there is a lot of this sovereign push, which obviously they're leaning into, and they're going horizontally as well than building the app. So lots of opportunity for them. And maybe we'll see a 40 bill next year. Who knows? Mads, what's your insight on the Mistral deal?
I don't know if I have any great insights, but I mean, just if we look at the parallels of what's happened elsewhere, we know that compute is important, and this is for compute spend. We need the data centers to build the models because scaling laws, they still work. Going back 18 months, people were starting to questioning scaling laws and can we keep making models better by throwing more compute at them? And it turned out we could, which is why we're seeing incredible models coming out of the States now, like Fable and other things. And so you need to build really good models, you need a lot of compute. And so Mistral needs more compute. But you also need compute to service the workloads and to deliver and grow revenue for inference. And Mistral, they're growing revenue. They were doing, I think the last sort of public number we had was back in February, 400 million recurring, targeting 1 billion by the end of the year, might even come in higher. So very good growth rate. And to sustain that growth, they need the compute to deliver to all the enterprise contracts they're signing up. So yeah, I'm totally with Joe here. This is a great thing.
Last but by no means least, a bit of a big unanswerable beast, but I'm going to try it anyway. So the question here is, can Europe build a $1 trillion business? I was reading an article this week in the FT with the European partner from Sequoia, Luciana Alexandru, and it was titled, Can Europe Build a $1 trillion business? Great interview, give it a read. To me, it somewhat oddly didn't answer its own question. However, raised lots of really interesting points. We obviously nearly have one with ASML, 700 bill at last val. So, and this is the one company globally that all of the $1 trillion club can't live without. So it is obviously a very, very important business, and it's right here. But is this near you, Joe? I mean, how far is ASML from you?
Oh yeah, I can drive down the road. There they are.
Right. There we go.
I mean, I always find that interesting, right? The most valuable tech company in Europe in the good old middle of the Netherlands. We always think of the hotbeds being not there. So yeah, it's amazing. And I think it's not that far from where they are to a $1 trillion valuation.
Yeah, it can't be. Yeah, really, really it can't be. A few, before we kick off on this one, a few fun, but also maybe depressing facts. The EU generates more startups per year than the US, and venture returns in Europe run about 6% higher, but 30% of our winners head off west. I guess no great surprise. So I'd like to pose this question here to you, wonderful gents. Can Europe build a $1 trillion company? Mads, can you kick this one off?
I think as you said, we're pretty close with ASML, 720, 750 billion valuation. So not far off the trillion, and it seems plausible that it will get there. I think the challenge we have is it's pretty far down to the next one. Spotify, Revolut, formidable companies, but they probably need to 10x from where they are to get to $1 trillion. It's not to say they can't, but there is some ways to go. So we just don't have the density of the ecosystem. Also, ASML is it's not a young company.
Yeah.
And it was a spin out, right? It's kind of Philips Technology and other businesses. So it's very different from the Googles and the Anthropics of this world that sort of grew up and became very big companies very quickly. This has taken time. This is more sort of a traditional European industrial approach. And we just don't have that ecosystem yet at that level. Now, You are absolutely right. We are seeing a lot of great things at the grassroots level. We're seeing great new companies being created. We're seeing more repeat founders. I'd say the quality of businesses that are being built in Europe is much higher than it was 15 years ago.
I
And in
love
terms
seeing
of
the recycling as well. That's the thing that always
100%.
brings me joy is how the talent and the capital is recycling. So yeah, great.
And one thing I think that's really positive there is just the energy we're seeing in London right now. It's in many ways the powerhouse that keeps the UK relevant in this game. And there was a kind of a bit of a wobble after Brexit, right, with some of those barriers and things. But I'd say that the city is firmly back now. And what we're seeing, especially in AI, is just tremendous. So I'm optimistic from that perspective. But I'm sure, I mean, Joe, you probably have a much wider lens on where victory lands and whether we can get it done.
Well, I don't even know if it's the right question. Can we build a trillion company? But we can and we will. Maybe let's remember, we talk about trillion-dollar companies like they're just normal and they're all everywhere around us. But it's only 8 years ago that the first publicly listed trillion-dollar company arose, right? Apple reached $1 trillion in summer of 2018. So this is a fairly new thing. And I remember, in the years before that, how crazy it seemed that there would be any company at $1 trillion. So, we live in a very brief moment, but if you put a little history on it, things are impossible until they become true. So I think that way about the European ecosystem. One of the great things about technology and innovation is that things that we look right now impossible to happen or never will happen, but they do happen, and they happen quicker than we seem to think they will. Is there anything in our portfolio that can go that way? I don't know. We focus on the early stages. So when I think back to the early stages of Amazon, it was a bookshop. I remember my boss at the time saying, "Hey, there's a new way you can buy books online." There was no
Who'd have
route.
thought?
There was no route from that to they're selling their own chips now. Really? You're a book, you make your own chip. Okay, right? And Google was search. There were 15 other search engines when Google came out. So can you see that getting to $1 trillion? You absolutely cannot see what that would become and how it would pivot. So I think in the same way, here's the kind of fun thing that I always think. Probably the next $1 trillion European company is already operational and running. And they're growing. They're there. Yeah. And I wish I knew which ones they were because I would put all my money on.
Yeah, let's go for it. Yeah, I'd be following you.
That's the diversity game, right? We're not sure which one. But I had a really fun conversation last week. A U.S. investor was visiting, and they've invested in a broad portfolio as well. And we were talking about Isar becoming Europe's newest decacorn. It's in our portfolio. We're super happy about it. They spoke at our annual meeting this year. Beautiful. And he said to me, I'm invested in the U.S. competitor, and I have to give it to you. The best company in the world for what they're doing is Isar, Polish tech out of Finland. And that makes me feel great. It's not that we're building something which works locally or whatever. If you want that particular service, which a lot of governments do and so on, they're the best in the world. And that, I think, is what drives ultimately these big outcomes. I end up being, not surprisingly, on your optimist side of the table, Madge. So
we have to, but we have that's the game we're in, right?
We're in this business.
We should go and make sandwiches if we're not optimists, that's for sure.
Yeah.
And it does make me smile when you're talking about which businesses are gonna become, because you look at Allbirds moving from selling shoes to selling compute and becoming smart birds. I forgot what they're called now, but I think there's going to be some weird and wonderful pivots, I'm sure, in this space. Mads, you've got a deal of the week. Who is in your crosshairs?
It's a very cool robotics company. It's the Sector out of Barcelona, and it's an AI generalist factory robot maker. So they make robots that are reconfigurable and they can learn on the job. Ooh. And they've just raised an $85 million Series A, which is Europe's largest robotics round. It was led by CRV, so the US outfit, and together with Samsung and LBMA is in the round, and other assorted investors. So it's pretty cool. The idea here is that generalist robots, they can beat specialists. So it's one robot for many tasks. You can reconfigure it, you can retrain it, and it's not a humanoid. So it's a different type of robot that can do things that are specialized for a specific purpose. So very, very cool. We've talked about previously how Europe sold KUKA and ABB to ABB was sold to SoftBank, right? So we've sold some of the old crown jewels, and it's just great to see some next-gen robotics companies come through.
Yeah, loving it. Oh, well, break legs and wallets, Jensen girls. Mads, week ahead, what's happening this week that we need to keep an eye out for?
So it was Accenture this week. Next week, it's Micron coming up. It's the only AI infrastructure print we're going to see in this window because NVIDIA, AMD, ASML, and others are not reporting until July. And we're going to watch kind of what's happening with the high bandwidth memory demand. Is it going to beat the even elevated guide? What's that going to say about CapEx? And of course, that's going to be the canary in the coal mine in terms of whether the great big CapEx train, that AI expansion trade, is going to continue. So that's certainly one to watch for. Other pieces, I mean, Anthropic, Fable, Mythos, is it going to be restored? We know that the engineers have been in Washington discussing, what are some of the safeguards and some of the guardrails that could be put up. But it's really the first test, I'd say, about whether a lab can reverse an export control switch. So we're in uncharted territory here, and I'm sure we're going to hear more about that next week. And then the last major item I'm going to be looking out for is that we have a rumored release of the next version of GPT. OpenAI's model 5.6 should come out next week. Polymarket has that at above 80%. So hopefully we're going to get some great new tech. And I think Sam Altman, he's had a bit of a tough 12 months. I think he probably hopes that while Dario, he's busy in Washington, he can push some great tech out and steal a march there.
He's probably quite thankful that somebody else is having a hard time, I imagine. Yes. But anyway, Joe, thank you so much for joining us. That was super insightful and interesting. It was a lovely pleasure to have you as a guest.
Thanks for inviting me. I'm a big fan. So to be honest, I feel like I've joined my favorite TV show. It's awesome.
You are welcome every time. Mads, my good man, always a pleasure and a gift to hang out with you. And we will catch you all next week.
See you on the next one.